We are here to discuss what is now officially the hottest investment market in the entire world. And I'm not exaggerating. And that includes cryptocurrencies too. And that's uranium. We were just talking about uranium last week. And guess what's happened? The spot price is up $5 since we talked last week. Every day I'm looking at my portfolio right now. I have a different stock up 10, 15, 18, 20%. Right now I'm in that period where I can't stop hitting the refresh button. This is absolutely glorious. And it's only just getting started because billionaire Eric Sprott and his fund are buying up all the physical uranium. These tiny stocks are going ballistic. It's only the beginning. And here to discuss that, I have my good friend Justin from Uranium Insider. I highly recommend every person right now, before it is too late, you have to sign up for Uranium Insider. The newsletter is right there down below in the description, and it's pinned to the comments right there down below. I'm a paying member myself. I'm a very happy paying member myself. The link to it is right there down below in the description and pinned to the comments. So I encourage everyone right now, this very moment, to go ahead and sign up for that. This is a historic market. There is no market else in the world that the entire physical supply can basically be bought up by one fund. And that's what's happening right now. So we're going to be discussing the latest and the greatest updates. So make sure you hit the like button on this video. Comment down below, go Uranium Go, go Uranium Go, or Justin Rules right there down below. And make sure that you share this video, hit the bell notification, and subscribe to get notified for future episodes. And shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. So Justin, good to see you.
Good to see you as well. Thanks for having me back on shorter notice. We recorded last Tuesday, which was a week from today. And I know that the video didn't get put out until Saturday. And it's crazy how dated it was already, even with only a few days passing. So since we spoke last Tuesday, the spot price is up over $5. It just broke $40 this morning for the first time, I think, since 2014. And Sprott has officially purchased almost 5 million pounds of uranium in less than 3 weeks. As of the market open this morning, they were sitting on $15 million of cash. And as the last time I checked, just before we hopped on this call, it looks like they've already issued more than 1 million shares via the ATM today, which means that they're going to be able to purchase, if the pounds are available, probably another close to 1 million pounds just today, if the pounds are available in the spot market. The reason I wanted to talk to you again on such short notice is because what's happening right now is far surpassing our expectations with Sprott. We knew that Sprott taking over UPC was a big deal. We knew that they had worked a long time to get the deal done. We knew that they were sharp. We knew that they would come into the space with clear intentions and clear to us unstated intentions. And what's happening so far is pretty phenomenal. They are now purchasing at this rate, let's see, 5 million pounds in 3 weeks. So let's say that's 7 million pounds per month. That would be 85 million pounds a year. That's almost twice what the US nuclear fleet is using in a year. It's an unbelievable development in the space. And I know that your audience is watching this channel, I Love Prosperity, because they want to prosper. And I really think this is a very, very unique opportunity. I believe that we're in for a strong commodities run in general. I think that a lot of money will be made in gold and silver, in copper, in oil, and natural gas, in the battery metals. But I think uranium is going to kill. I think it's going to breach the gains of all of these sectors, in my opinion. And we're just in the very early innings. So I'm happy to be talking with you again today.
I mean, what on earth is going to happen to this market if they've already bought that much? And more important than how much they're buying is how much is moving the market, because the market obviously is in such a supply deficit and is so illiquid. So to have this type of a movement in about 3 weeks or so, I just sit here and I go, first of all, I feel bad for all the people that leave comments. People leave comments. I was telling you off air, comment that's like, another pump and dump will be at $20 next week. And I'm like, oh my God, I feel so bad for this guy, because like everyone's gonna 5 and 10x their portfolios really quickly if Sprott's keeping what they're doing up, which obviously are. But my question is like, where is this going to go if they're already moving the market like that? Not even 2 years from now, where is it going to be? It's September 7th. Where is this market going to be at the beginning of next year?
It's a good question. I mean, right now we're at an interesting confluence of a number of factors. Okay. And just to answer kind of the negative comments or the doubtful comments, I don't want to hate on these people because that's what makes a market. But this isn't really a pump and dump. I mean, it's not a pump to begin with. The reason the price is moving is because somebody's physically buying uranium. It's not because a highly influential person is tweeting about it or posting on Instagram about it or trying to get their friends to buy it. I mean, the Wall Street Bets crowd is now aware of the thesis and they're able to buy what's on the New York Stock Exchange. But we're seeing a move across the sector. Most of these stocks are listed on the TSX, and including Sprott is on the TSX. So none of these entities, the Wall Street Bets folks, the Robinhooders, are not going after Sprott as a meme stock. We're seeing a lot of call options activity in Cameco, which is part of the reason it made almost a 20% move last week. Its largest up week in the history of the stock.
Wow.
But what we have, it's not a pump and dump. Will there be a time to dump it? Yes. Am I pumping it? Yes. But you're going to thank me in 6 to 12 months for making you aware of this thesis. I mean, not you, but whoever's listening.
Oh, I'm going to thank you too.
Yeah. So to lay out the confluence of factors right now is what we have first of all, we have Sprott buying physical uranium. So if you know who Sprott is, then that answers part of that question. If you've done research on the physical uranium market, you would likely know that the spot market, what's sitting above ground and available for sale, is clearly thin. And that's based on 5 million pounds moving the price up 20%. Okay. Wow. That's 5 million pounds is like 2% of the annual production of the annual demand of uranium, right? 3%, whatever. It's really, really minute. And so for the price to move that much on that little volume, it's because they're demanding fast delivery. All of these settlements have been within 30 days. Or I shouldn't say delivery, I should say settlement, because they're not moving the pounds around. They're just changing ownership on paper at the 3 conversion facilities. So what's sitting above ground in his mobile inventory and is available for sale now is clearly extremely thin. It's so thin that, in my opinion, they're not going to be able to have that type of turnaround for much longer. I actually think that the price moves in the spot price will probably slow down once they have to buy farther out on the curve, on the delivery curve, but the trajectory will continue the same. And I'm not positive it'll slow down, by the way. I just think that once they clear out what's literally sitting in a can at one of these conversion facilities and everything that's for sale at these prices is sold, then they're going to have to buy something that can get delivered to one of these facilities 2-3 months down the road, 6 months down the road. They are trying to keep from incentivizing production by buying too far out on the curve. And so far, they've been able to do that. All of the settlement has been within 30 days. So we have a thin physical market. We have Sprott buying into that physical market. Then we have the WNA conference happening now, which happens every September, and every 2 years we have a new fuel report. And that's going to come out very, very soon. We're excited to see that. We think it's going to be a pretty similar picture to the previous fuel report, which is, a slight balancing of the market when care and maintenance mines come back online, but it's somewhat irrelevant because the purchasing is out of future production, and followed by multiple years of supply deficit because we have yet to see new projects incentivized by these prices. So we have that conference happening. We have the NEI conference happening next month, I believe. I believe it happens in October, which typically it does, and that lines up with a new fiscal year for the utilities, at least the U.S. utilities, October 1st. All of that is in conjunction with the seasonality for uranium stocks, which typically runs October through about February, March. There's usually a bit of a dip in January, But all bets are off now. And we're seeing a seasonality move start in late August. That's very unique. August, by the way, in the spot market and for the equities, the last 2 weeks of August are the slowest period and are usually the weakest period of the entire year. And we just saw, over the last 2 weeks in August, a 10 to 15% move in the spot price and big moves in the equities as well. So we have seasonality meets a number of these conferences, and gosh, to be a fly on the wall at the nuclear fuel conference, I can't imagine that Spot and Sprott are not going to be primary talking points. All of that combined with the fact that the primary nuclear fuel consultant is still yet to fire the warning shot to utilities. They put out a piece a couple of months ago entitled "The Rise of Secondary Demand," where they discussed the fact that financial players were starting to take interest in the market, speculating on the fact that they might be able to move the price in a positive direction. But even over 3 weeks of the price movements that we see, we've yet to see them come out and say, hey guys, wake up. This is actually happening now. And the utilities that have had years to act are kind of getting a rude awakening now that haven't been paying attention. And so we don't really know what the utility term contracting market is going to look like. We expect that the movement in the spot price and the arrival of Sprott is going to light a fire and get some of the utilities that were kind of on the edge of needing to contract for future deliveries to act sooner. So all of these things are combined with a general period of inflation, of rising natural gas prices, which is usually good for uranium, and an expected commodities run. I'm a little bit frightened by how bullish I am right now, because I thought I was bullish before, and I continue to think, all right, what is going to kill this? Like what's going to stop this? What's going to stop Sprott? And I can't answer that. It's always possible that the producers now see the writing on the wall, start to increase production, because Atomprom is already committed to not increasing production through 2023. Interestingly enough, they announced that forward guidance for 2023. I believe it was less than a month before Sprott's ATM went live. So I can't say that was ideal timing for that announcement. But, the Uzbeks who are increasing production, they are kind of like a Kazakhstan light. They can increase their production, and I'm pretty sure they will. But it's just not enough. I mean, it's too little too late. I think that it's lights out. And I think that what we're seeing now is likely to continue. And we just had the spot price breach the term price. That happened in 2006, the beginning of the previous parabolic move. I think we're in the early stages of a really, really parabolic move in the spot price, and the equities following suit.
So for everyone listening, you want to make sure that you're signed up to Uranium Insider, break down the entire market, the most important stocks to be buying, selling, what to be looking for. I'm a paying member myself, and I've been very happy with my uranium portfolio, to say the least, over the last year or so, but especially just the last 2 weeks. So the link to that is right there down below. It's in the description and it's pinned to the comments. I'm a paying member myself. I highly suggest you do that. Now let's ask this question. Where's this going to go? How high is this thing going to go? I mean, we haven't had the meme stalkers. We haven't had the Wall Street bets. We still got, as you said, a lot of hedge fund type of folks are off on their private island vacations for a little bit longer. I mean, there's a lot, and everyone is going to be looking for something. I mean, my feeling is this is going to turn into something like crypto, where everyone's going to try to start jumping in. I mean, on a day where a lot of the markets were down, seeing these stocks up, many of them 15, 20% at the same time. Oh, where does this thing go? How big can this thing get? And how long does it take to play itself out?
Where does it go? Up. It goes up. How high does it go? That is probably going to be determined by Sprott. I hate to say it, but that's really my feeling on this. There was no logical reason for the spot price to reach $134 in the previous market. There was nothing fundamental to justify that price, yet it happened. And this, of course, was in 2007. That was prior to the existence of the iPhone, prior to social media being embedded in everybody's lives and communication happening at the blink of an eye. So we're in an entirely different market, not to mention the total amount of funds in the markets are so much greater over the course of 15 years. There's a gentleman, I've mentioned him a couple of times already in previous interviews, Kevin Bambro. He's I believe he was the co-founder of Sprott, and he was a manager of Sprott in the 2000s. He did extremely well on his investments in uranium. He's very sharp. He's been frequently on Twitter. He's retired now. He's not affiliated with Sprott, by the way, any longer. But he's probably putting out some of the most bullish price targets for uranium. He's saying things like, I'm not even going to think about selling until uranium hits $150. He's making price predictions based on inflation adjustments of the previous high, which don't really make any sense when it comes to what the nuclear fuel market requires in terms of price for the health of the mines. But I think that narrative it's an old story now. It's an old story that's only 6 months old. The price, we know the price we need, and I can guarantee we're going much, much higher than that. So making price predictions, in my opinion, is basically impossible, but we know for sure that it's going to that $60 to $70 level. And the move between here and there is going to be huge for equities. And if and when we get an overshoot, likely north of $100, and who knows how high it goes. I mean, I just can't say. Nobody can say. That's up to the people driving the price. So it's impossible really to say how high do they want it to go. Probably higher than that. But when we get north of that, then it turns into that parabolic speculative frenzy. And if you look at charts from the previous market, you can see that the moves from, let's say, 2003 to 2006 were astonishing. They were fantastic by all metrics. Then from 2006 to 2007, they went like this. They went up like a hockey stick. And when everything was extremely overvalued, they doubled again. And so I think that, well, let's put this in perspective. The previous market cap of the uranium sector was 120 billion at the peak. And that was with 400 something, 500 something companies in the space. We have about 65 companies in the space now, and the market cap of the sector is around 35 billion. So for the total market cap of the sector to quadruple or almost quadruple gets us to the previous market cap. And I'm telling you, we're going higher. I would not be surprised to see north of 200 billion, possibly way higher than that in this market. So even the large caps, we're going to see multiples. And, the only thing that can really kill this would be a nuclear accident, God forbid. I think that is statistically less likely to happen than some people think. I think that small nuclear accidents happen more frequently, like we just saw at the plant in China, but they shut down the plant to address the issue with a leaky fuel rod. Didn't cause any problems besides, that problem in and of itself didn't cause any radiation harm to anybody or anything like that. But the likelihood of another Fukushima happening is pretty slim due to the safety measures that every utility put into place after Fukushima.
So let's say someone is listening to this and they say, well, you're talking about how high it's went and all these things. I'm just going to wait for a pullback to happen. Maybe they've heard me say, hey, join Uranium Insider. And they're like, yeah, but I'll just wait now. What is your response to someone that says they just want to see what happens first? And everyone, please make sure for your own good, at least join Uranium Insider right now and watch what happens so you're not sitting on the sideline, because this is going to be historic. The link is in the description and pinned to the comments right there down below.
I can answer that in a number of ways. First of all, why now? Okay, so yes, and why not wait for a pullback? There will be pullbacks, 100% guaranteed. Will the bottom of that pullback be lower than where the stocks are now? I have no idea. That's impossible for anybody to gauge. I think we'll see a pullback sooner rather than later, just because we have, short-term overbought conditions on the daily charts for most stocks in the space. But I think that the pullbacks will be shallower and faster than the pullbacks we just saw in July and August. And if there's another pullback like we saw in July and August, which saw some stocks go 25 to 35%, a couple of Australian listed outliers went down about 50%. You'll notice that sentiment goes in the toilet when that happens. And one of the big things that we do at our newsletter is we distill what's happening in the market down into what is actionable for you as an investor. So when we had a pullback in July, we had a number of members reaching out, not in a full-fledged panic, but like, hey, Justin, we understand that Sprott's about to hit the market. Why are these things selling off? And some of this was late money that came in May and June, and they were down 10, 15, 20% on that pullback. I understand it's painful to see. It's easy for me to say because I dealt with that for 4 years before this thing started moving. So I see red on the screen. It doesn't even faze me one bit. Maybe that's a strength. Maybe that's a weakness. I don't know. But so what we did in that pullback in July, and this was a couple of days before the bottom of that pullback, we issued a bulletin called Uranium Gut Check. We sent that out to all of our members. We described exactly what was happening. A low volume pullback with ETFs not having any redemptions. What does that mean? That means the ETFs are not selling down to buyback shares. When that happens, you know that volume is coming into the ETFs, and you know that maybe there's bigger money, smarter money that's pulling back. That didn't happen. We saw that clearly. We communicated that with our members. Sprott is about to hit the market next month. Their ATM goes live on this date. It's 3 weeks from now. Don't panic. If you're still adding to your positions, do it now. Add another tranche now. This is a beautiful time to do it. Needless to say, in the past 2 weeks, we've gotten hundreds of emails saying, thank you. Thank you for letting us know to hang on. Thank you for telling us to buy. So that was actually really moving, because like our members have real money on the line and they're almost entirely retail folks. And that's really why we're doing what we're doing, is to try to help the retail folks out and to distill a very complicated sector down into what you need to know as an investor. Conversely, if and when there is a reason to sell out, or if the market is giving us other signals that are contrary to our long positions, we will let you know. So that's a big reason why we think that our newsletter is very important for anybody investing in this space. Another reason is why is that we have a process for determining what we own. And we go through that process with every company in the space. And that has pumped out a number of really, really big winners. In fact, if you go and you look at the 3-year returns for all of the stocks in the space, of the top, Of the top 7, we own 5 of those. So we've done a really good job of picking the biggest winners in the space. And so rather than just buying what people are pumping on Twitter or just buying into an ETF, if you buy the stocks that are the most likely to return in this environment, which are stocks that have unique stories and have unique catalysts, then you can vastly outperform the ETFs. We have outperformed the ETFs by 3.5 times since we started the newsletter. So we're very proud of that track record. And those are probably the 2 biggest reasons, I think, for anyone to subscribe at any point. And in my opinion, the sooner rather than later, because we're on top of this. This is all we do. So if you have questions about the market, most likely our newsletters will answer those questions, and our bulletins will bring actionable information. We just sent out one this morning. In fact, we're having another members only Zoom webinar next week where all of our members can join us live and ask questions. And we get to dive really deep into what's going on in the sector. Myself and one of the members of my team who's a retired hedge fund manager. So that's super fun. And we got so much good feedback from that. So it's a great community. And man, I just keep pinching myself with this setup. And I don't want to sound irresponsibly bullish. And I'll tell you, if a nuclear accident happens, it's not good. The Uzbeks are going to ramp. The Russians are building a mine, but it's not going to be online significant enough to move the market. I mean, there's bearish storylines that you can latch onto, but they're not going to be. It's too little, too late, in my opinion. And I think that it's lights out, and I think that this move is going to be astonishing, really.
Yeah, that's the only way I would describe it, is astonishing. I had the hugest smile on my face this morning, seeing again like 7 or 8 of my stocks like in the first hour already up like 15, 18, 20%. And what's amazing to me more than anything is how many people don't know about the story yet. And it shows you, for that type of a movement, I mean, you don't really have much of a retail buying yet. You don't have media coverage yet. You don't even have a lot of hedge funds buying, just people really in the know. And so, one, it shows me, oh my gosh, how illiquid are these stocks? I mean, how much can they really move? And two, then I go, well, what the heck is going to happen when everybody finds out about this? I mean, this is going to be quite the ride.
Yeah, it's such a small market too. There's just so little stocks to buy, and it's a really interesting juxtaposition when you put the valuation of the stocks, because you can argue that a uranium explorer that's never going to produce a single dollar of cash flow is overvalued at $150 million. You can easily make that argument, but compared with the echo chamber of uranium Twitter, which has about, let's just look at John Quigg's following, because he has the largest following on uranium Twitter, is 35, 36, 37,000 people, compared to the popularity of, let's say, the number of people invested in cryptocurrencies, the number of oil investors, the number of gold and silver investors. I mean, the precious metals market is so much larger than uranium that we have not even scratched the surface of potential funds flowing into this space. And so the argument of, is something overvalued? If you allow that to keep you out of the market, then you're probably not going to be very happy with missing what's likely to happen in the uranium market. It's just too small. And when real money comes in, they go after Cameco, Kazatomprom, URA, and now starting to go after URNM. Well, what happens when they buy the ETFs? The ETFs buy your smaller stocks. That's what happens. So you can enter these larger stocks. If you have a larger amount of money to invest, you don't want to go after that $50 million junior. You're going to want to put it into something liquid. And that's going to be the Camecos and the URAs. And that's what institutions do. They buy Sprott, they buy URA, and those ETFs that hold the smaller uranium companies. So URA can buy any company that's above $50 million. Actually, they raised that market cap for inflation reasons. I think it's 70 million, something in that ballpark. Doesn't matter. The smaller stocks, they buy those. They have a small percentage holding in a number of companies across the space. And it's just this flywheel. The big money comes into these ETFs, and they buy all the smaller stocks. And if you position yourselves in some of these some of the juniors, or even some of the mid cap developers, when URA starts buying, man, it's just like a march. They just keep going. It's pretty wild. And the reverse is equally as true. When money is flowing out of the ETFs, they have to sell those holdings. So that's why that flywheel works in both directions. And that's why the valuations are so extreme in both directions. They were extremely low for a sector that's 10% of the global of the Earth's electrical grid. Was down below a $10 billion market cap. There's no way you could justify that in terms of valuation, and you're not going to be able to justify the valuations that are coming on the upside. Not going to make sense. So it's all about the flow of funds. And it's just starting.
Okay, Mr. Uranium, yourself, Mr. Justin, Uranium Insider. The link right there down below to join Uranium Insider newsletter is right there down below in the description and pinned to the comments. Highly recommend everybody do that. We're going to keep covering this uranium story as it keeps developing. Obviously, this is a very exciting thing, and the goal here is to help as many of us as humanly possible escape the rat race in the system right now and this is an opportunity that is not only alive and well, but it's out there taking prisoners right now. So we want to make sure all of us are as prepared as possible. So if there's questions you feel that you want to hear discussed, ones I've missed, things you want to hear Justin talk about, please leave those in the comments right there down below, and we'll pool them on the next time right there down below. Hit the like button, bell notification, all that stuff to send it out into the YouTube universe. Share this video, put it on, copy and paste the link, put it on Twitter, Facebook, social media, text it to a friend. And Justin, any final words?
I would say that if you've watched a number of these videos and have yet to invest in uranium or buy the newsletter, I would suggest, at the very least, if you're not on Twitter, get on Twitter, follow me, follow John Quakes. If you follow the two of us, you'll find the rest of the important people to follow. Also, check out Sprott's Physical Uranium Trust webpage for the Uranium Trust. They update it every single day. I believe it's at 4 p.m. Pacific time. They update every day, and they tell you how many pounds they've purchased in that day, what their total net asset value is, what their total AUM, the amount of cash they have on hand. It's the transparency that they're providing the market is fantastic. And also, if you're on Twitter, there's a gentleman named Alex Weinstein who is doing this thing called the Sprott tracker. It's the shared Google sheet that he's tracking in even finer detail than Sprott themselves are tracking. He has a bunch of graphs that really line out what's going on with the Sprott Physical Uranium Trust. So check both of those things out. And if you haven't joined our newsletter and are interested in, send us a message, support@uraniuminsider.com. Let us know that you'd like a free sample of one of our monthly letters so you can get an idea of the content we put out. I'll be happy to send that to you. Hit us with any questions you might have. And let's get this. It's happening. It's actually happening. And part of the reason I myself am just speak with so much excitement, and you're seeing a lot of that excitement on Twitter, is not because necessarily even that the equities are moving in the way that they are, or that we're celebrating a euphoric peak. It's because what we've been waiting for in this market for years is finally actually happening. It's the theory has been around for 3-4 years of, the market is so thin that we just need some buying volume to come in to show how thin it is. Now that's happening, and that's why you're seeing such celebrations on social media around this. And I'm celebrating too, but I'm more excited for what's coming, because uranium's at $40 a pound now, and it's going to double, if not triple. The equities will do even more than that during that time frame. So I'm glad, I'm happy to be able to talk to you and your audience as well, and just loving this.
Yeah, what I would say, what gets me most excited is where this can go, but most specifically, you see that unless there's as you said, some type of a black swan event, it's so bulletproof in that there is no other market in the world that is more illiquid and is in a greater supply deficit. 200 million pounds needed every year, about 130 million or so mined. And there is a fund that is able to buy pretty much all the uranium that's out there, out of that 130 million. And so you go, is there anything else in the world that has this type of a squeeze potential right now? And I'm not sure there is, especially when you consider there's only 64, 65 publicly traded companies. What is that saying? That's the old Doug Casey saying. And he says that when money goes into gold stocks, it's like trying to get the contents of Hoover Dam through a garden hose. But when money goes into uranium stocks, it's like getting Hoover Dam trying to sip up Hoover Dam through a straw. And that's what's happening right now. So we want to thank you for listening to today's episode. Thank you for supporting the channel and our show to get this message out. One of the ways you can do this is give us a comment down below. Go Uranium Go. Right there down below, pinned to the comments in the description, is the Uranium Insider newsletter. I highly recommend you sign up to that right now. Share this video. And Justin, I can't wait to catch up here pretty soon. It sounds like we might be having some more regular uranium updates.
Yeah, happy to come back anytime, Jake. Yeah, it's It's super exciting. And I agree that the thesis is pretty bulletproof. You know, there is a decent amount of uranium out there on care and maintenance mines and idled supply, but it's going to take contracting to get it out of the ground. And that's going to come too. I mean, the utilities, they have to buy uranium. They have to buy uranium. They don't have a choice. It's shut down a multi-billion-dollar asset or buy or overpay for uranium. And those are the two choices. We know which one they'll end up doing.
So, Justin, we want to thank you for coming on today. Thank you for all your great work and all of your updates. And give us a comment down below. Let us know if you're invested in uranium. If you're not, let us know why not. And we'd love to hear what's going on in your mind. So, thanks for watching today's episode. Be sure to sign up to the link right there down below. And we'll see you next time.